everyone. I hope traders and investors alike were green on Friday. Just want to first start out by saying happy Father's Day to all the fathers out there. In this video, we want to recreate Friday, June 16th from our trading room. So what did we know? We're going to start out and talk about what we knew in pre-market. We knew when the SPY opened up at 4:30 that it gapped down. We also knew that the ES didn't. So that told us that was just the markets were healthy. Everything was fine. It was just a dividend coming out of the market. We knew that the previous day before we had a strong ranging day. We also knew that it was options expiration day, so we know our normal options expiration day is we chop quite a bit and then we free up, and we usually get a nice trend or a nice up and down move, but be able to make some nice money after the market finally starts to move after a big period of chop. So we were expecting that on Friday, seeing a big period of chop and then seeing the market trend, but the market did trend the day before, so there was a very good chance that we could get some very tight action. So options expiration, we also knew that we had a rebalance today from the S&P 500. So we know there was about 150 billion worth of assets that were going to be moved, which we've seen that into the end of the day, and we're going to talk about that. We've probably seen some of that throughout the day as the market was pulling back, because we did trade Friday. We already know, without looking at the charts now, that the market did pull back on Friday. So we also know why the market was raging the day before, that there was a whole lot of stocks that had hit new highs. We had Apple, Microsoft, Nvidia hit new highs, and there was some other smaller stuff that hit new highs as well. So at market open, we did see a put starting to come in, but we did not see a whole lot of flow. So that alone tells us something. Not seeing a whole lot of flow coming in at market open lets us know, just a quick reminder, lets us know that there's not a whole lot of FOMO happening in the market. When the market's FOMOing, we're going to see a large quantity of option flow coming in on several different names, and that's what we look for. So we knew things were kind of thin, liquidity was kind of thin, and there was not a whole lot of action coming in. So this is our first candle. The market did ramp up about 9:14. So just kind of blowing them and, then pre-market imbalances. We did get consumer sentiment at 8:30. Market did not do much on it, but did ramp up at 9:14 and the market opened. And that's what caused this gap. This is the first 5-minute candle. That's exactly what caused this gap. Was, we ran up and then we started to see some profit taken. Now we added 441 from the day before. We had 441 on the chart. So in which that level worked out good. So with the run up, we also know that, this gapping up at market open, if we pull back, watch for a gap fill. So this is the 5-minute chart. We know we had bearish flow coming in right now, and we pull right back and give us a gap fill right here. So let's take a look at this action on the 1. All right, so we got a downtrend like this, bouncing off our 441 with a hammer, but we're still in the downtrend. Can we take the downtrend out? Struggling there. We are taking the downtrend out, but not seeing a whole lot of power. Just as soon as it tried to push up, ends up rolling back over. So if you remember correctly, this is when we thought we had an H cell pattern, but this never confirmed, never broke below. So this went quickly, just went from an possible H cell pattern to a double bottom. Draw your box from your candle body down to your wick. On this side, this candle and or wick can touch or protrude into the box, but cannot protrude out of the box. We know we can trade them without being super textbook. We do it all the time. Come down, very nice gap fill. Try to give us an H cell pattern, seeing a bullish engulfing candle there with a double bottom. To confirm the double bottom, you need to take this line out right here. You need to take your center of your basically the neckline, just take the peak and the double bottom out and we need to cross that level before we even consider going higher. And we need the 9 up above that level. Now we're coming off a bottom. MACD's not showing a lot of momentum yet. We are seeing the histogram bars fade quickly, change colors and fade. Did see a little bit of bearish momentum coming in there, but you see it fading again on that bullish engulfing candle. Could be coming in for a pinch. See what happens here. Testing the line, struggling with it. Moving averages come down, and this candle shoots up above. This candle comes back down. If you're looking for a trending trade, you did not chase this candle. I know you didn't chase this candle because you're not looking for a scalp. I scalped this candle, but if you're looking for a trending trade, you don't enter on this candle. You're waiting for the pullback to your short-term moving average or your breakout area. That's exactly what this candle is trying to do right here, and then pushing back up. And you can see right here that this is creating a small flag. So you need a candle to close over top of that, a new candle to open up over top of that level, or give you a breakaway gap of some sort. Now, this candle opened up, confirming the flag, trying to push higher. The nine's coming up, strong histogram. You're breaking through your zero line, or seeing one lighter green histogram bar coming in, letting us know that some of that bullish momentum may be leaving. So anytime we flag, we're kind of looking for a pinch. So that's not surprising there to see that. We would like to see the MACD pinch, with that flag and then move higher. And in this case, it just failed trying to get back up. So we failed and pull back. So what do we look like on the 5 right now? So on the 5 down here, you have a bullish harami down here, and we're trying to push higher as well. You have a hammer candle right there on your 9 and 20, your 9 and 20 on your 5s trying to open up. Let's hit one more candle here, and you can see this candle has so far not confirmed that little hammer candle. Let's go back to the 5 or the 1. You can see we tried to push up, got this little bullish engulfing, tried to push up and just failed. MACD failed. It looked good there for a move higher. We talked about this one green histogram bar. You got two more, then we went dark green again, letting us know that bullish momentum's coming in. It tried to push up and give a nice little push. Actually, we talked about this area right here being a resistance level, and we actually said we'd like it better over that level because this was a contraction pattern that broke to the downside. So a flagged resistance, a contraction pattern is definitely a level of previous resistance that needs to be respected, and it's exactly what we pushed up into there, and we called that out as well. And by this time, we're still mostly put heavy on the day, like 60% put heavy at this point for the trades that we're looking for. And remember, we're not just looking for average option flow. We're looking for get me in now type coach, get me in now coach type plays. So you can see we're coming down here. Not a whole lot of power, possible shoulder, head, shoulder, trying to take it out right there. That just ruined it. But you can see we are trying to push higher after clearing this level. MACD's opening back up again. Let's go look on the 5. Pushing higher here. It's like we talked about a while ago. In this area, they wanted to open up and they failed, come right back down. And you can kind of see the little goose head beak opening up right there on the 5. I don't know why I got this so small. I can blow that up. You can see it right there. There's your goose head for your pullback, but never crossed, trying to push higher. And that's what we talk about when you see those goose heads. We call them goose head, just a little pattern. But when you see that goose head, and the beak open up, it just lets you know that the pullback did not have a lot of power into it. And you can see right here, this is giving you a very nice trading range as these moving averages are opening up. So in this candle, starting to push up out of that range. Let's go back to the 1. And like I said, we tried to push up here. Not the perfect trend at all. Choppy and just trying to move lower. And right here is where we're starting to go back to the 5. All right, so right here, right now, we got a bearish engulfing on the 5. We're starting to pull back to that 441 again. It's like a magnet. Couldn't get off from it for a while. Testing it, hammer candle, but not respecting it right there. So you got a hammer candle, 3 candles to confirm this. This candle confirmed the hammer candle. So momentum candle pushing higher, confirming, pushing above this candle. This is confirmed that hammer as a level reconfirms 441 as support, confirms that hammer as a bullish reversal, trying to push up here, but once again, not a strong move. Couldn't even come down to the zero line, or couldn't even get up to the zero line. Remember calling this goose head out, and it just took a while. We've seen a lot of crossing, and at this time of the day, we were very low liquidity in the markets. Just temporary. It's just that time of day where you don't have a whole lot of power. But this is when, this is the exact action we were expecting. So we got a nice trend at open, but at this point, it's the chop that we were expecting for options expiration day, waiting for the market to open up. So nobody was in a real hurry to take a trade here. We were able to pull some trades off that 441 level if you were looking for short-term bounces. And you can go back to that 1 minute chart, and you can see could have took a trade off that hammer. Then you had a set of pipes here, which they were called out. That was another nice trade. Pipes, momentum candle, this candle breaking up, trying to get into your 9. That could have made another very nice shorter term trade. See, while we're chopping like that, that's why it's good to know how to take these smaller term trades, short trades, because being a day trader, you're going to have days where you're just going to make amazing money, and there's other days that you're only going to make enough money to just basically pay the bills. Some days are great, thousands and thousands and thousands of dollar days, tens of thousands, and some days maybe on the lower end of the scale, but we got to keep the bills paid. So some days we have strong trending markets. We have really good markets, and some days are just choppy. So we can see here on the one that we're trying to come back down. This is when we started to put a pattern in again on the 5. So we're going to go to the 5 and watch through this pattern here. So it's what this is forming. This is forming a contraction pattern on the 5. And once again, this was called out. So we need to draw a box around this pattern. We'll just draw those candles right there. And let's go to the 1. This is not the most perfect box. You want to keep it tight on your candle bodies. Normally, you would want to keep it tight on your candle bodies. I'm not going to fight it here. You can see what it looks like. It breaks out on the daily, but you need a breakout on the time frame that it was drawn on, still trading within the contraction pattern. Remember, contraction, expansion, trend. Contraction, expansion, trend. So your next phase is going to be the expansion phase. Your expansion phase can be a wild ride. So we have the contraction pattern there, and we need to break out on the time frame that was drawn. So we need to see the breakout on this time frame. And right there, we got the breakout trying to push higher. The one thing about a contraction pattern is they can come back and retest the center of that pattern, and we know that. So we always need to be careful trading these until they start to trend. We usually get a nice trend out of them, not all the time. In this case, you can see we broke the pattern out. We got confirmation on the 5. Now is exactly when you're looking for a trade. You got your 200 up here. Normally, you would just draw a line right through here, a break of that line, you're looking for a move up. Just draw that line flat, a break of that line, you're looking for a move up. In this case, you got your 200 up there. So you got to make a decision. Do I want to try to trade it through that 200? That's a decision. Or you could wait to look for an entry up there. Still got a decent MACD. We've blown through the 2 or the 0 line and got the goose head coming in for a possible pinch on the MACD. Once again, we know we don't have the greatest power down here, and we failed at the 200. So once again, a lot of times when you have a level of interest right there, you're better off to be patient and wait for the level of interest to be taken out. If you tried a bullish trade there with a moving average above you like that, then in this case, sometimes it works, but in this case, it would have failed. Those are decisions we have to make, while we're trading. So let's go back. Since the contraction pattern was on the 5, let's go back to the 5 and see where we're at now. You can see the contraction pattern pushed up. Looks like it wants to come back down into that pattern. Let's see what happens. And a retest. In this case, we're getting a retest of the breakout area. This was your breakout area. This candle come back down, retested it, trying to push higher here on the 5. Coming back in, will we break for this 5-minute flag? Flagging back into your 9. Have your line drawn right there. Your candle closes up over top of that line, and your next candle needs to open up and be outside of that line, preferably up above this candle. Trying to push higher, and that would have made a small 5-minute trade there. Would have been a small trade, but once again, we're trading in the middle of options expiration, and it is super, super choppy. So we're just trying to pay the bills right now. So we've seen that 5-minute candle. Let's go back one more time. We see this 5-minute bearish engulfing candle. Let's go back to the one. Looks like it wants to come back down. Broke this little candle line right there for support. And this is where we started to move lower. And this is where we started to put in this wild looking head and shoulders pattern. You see it a little better on the 5. So, and this is what we called out because, once again, we try to we try to have an idea what the market's doing. We don't enter just because we think we know what the market's doing, but it's good to realize, what the market's doing. And this is a huge help. So we had already seen this head and shoulders possibly forming, and that's exactly what happened. And then we talked about how rough head and shoulders are to trade. You can see shoulder, head, kind of a shoulder. Now, if you go look on your one, and this is, having somebody on your team that has traded tens of thousands of patterns on all multiple time frames is huge. So let's go and draw a neckline. It is not a perfect chart. I mean, it's not a textbook pattern. You can see your shoulder, head, shoulder right there. And this was called out at open. And we also are called out as we were trading. And we also talked about how head and shoulders traded. So everybody would realize that these moves can come to the upside, can come really strong sometimes and want to fake you out of the trades. And you can also understand the way if you actually missed the original neckline breakout, you can also understand where to enter these things on the way down as well and get safe entries. In this case, we kept testing this 441, 441. We really didn't start moving after we broke that, but we come back and actually took the breakout area out. And at this right here, we talked about how if you're trading shares, it's not always best if you're trading options, depending on what your strike is. Sometimes you just can't stay into it, but so long if you're using proper risk management. But this can come up this far and come into the breakout area. As long as you don't take that shoulder out, the trade's still valid. Now, in this case, we ended up putting in so we pushed up and it gave us another bearish reversal pattern right here. This is called a tower top. For a tower top or a tower bottom, all you need is a engulfing candle going in, a strong candle going in and a strong candle going out in the opposite direction and square it off. That's all you really need to know. If you can just understand that, you'll do great. Of course, there's some other things about it, but if you just understand that, you will do great and make money in the markets. You just don't need to know the hugest details of everything like a lot of people think. So you can see the 5-minute chart here. This candle actually confirmed below 441. This candle is trying to push back up above it. Let's go back to the one. So combining multiple time frames is very powerful. And right here, we talked about how this looked like a bear flag. Even though we were able to take moving averages out, the price action was just really straight. We could draw the line, end up taking that out. So head and shoulders pattern, and we put in a tower top. Now we're putting in a bear flag, all signs bearish. We had bearish flow coming in on this move. In this case right here, you can look at this as a trading range. You could have took another entry right here. You could have stayed in from up here, just pointing out different entrances that you could have got into this pattern with. And that's where we finally broke loose. Just started to form a contraction pattern in here, broke up in the contraction pattern. So let's draw this one out. So this was, we can start right here and just look, everything kind of traded. There's all those candles kind of traded within that range. You could take a couple candles out and move it this way. The center of the pattern, always watch the center of the pattern because a lot of times they'll break out and just roll right back over. This candle come back down, retested the center of the pattern, push back up. When it come back down again, this candle closed below this candle, which closed below the center of your pattern, and offered another entry to the downside. Now, you could have still been into it from up here as well if you had the proper, strike and you wanted to hold through that, which is fine. For me, there's just a lot of little entrances where I can lock in a lot of smaller trades and lock in profits on all these trades. Instead of waiting for one gain, lock in many different gains. That's just the way that I trade. And you can see moving lower, pushing up, moving lower. So let's go take a look here at the 5-minute chart just to see what it looks like. And you can see moving lower. You can also see a very nice downtrend through here. respecting the 9 nicely. So you took the 5-minute pattern and played this 9. You could have stayed in this trade. You may have been a little red up here, maybe, but you were still respecting your 9 moving average and moving lower. And as you can see, we pull back and pull back. And going into the end of the day, as we were moving lower, we've seen a lot of block orders going off on the SPY, block orders going off on the Qs, and block orders going off on IWM. Now, looking at the price action of those block orders, we don't know whether they were buys or sells, but looking at the price action of those block orders when they were coming in, with the SPY pulling back. Now, these were not dark pools, these were block orders. Now, with the SPY pulling back, with the Qs pulling back, most likely those were sells, and with the IWM moving higher, seeing millions of dollars coming in on that at one time, and it pushing higher, most likely that was a rotation into some small caps. I hope you find this helpful, and I want to see you in the trading room, and enjoy your weekend and enjoy your Father's Day weekend. Have a great day.